What if the entire market is fundamentally wrong about this crypto crash? What if the fear, the panic, and the sea of red you're seeing on the charts are all part of a grand illusion designed to shake out the week before the next monumental move? While most are fixated on the alarming headlines, financial analyst Tom Lee has just appeared on CNBC with a shocking counter narrative, suggesting that everyone is misreading the signals and that a significant shift is imminent in the coming weeks. We are about to pull back the curtain on the crypto crash, dissect the hidden mechanics behind XRP's price action, and uncover what the smartest minds in finance are seeing that others are not. Before we dive deep into the shadows of the market, it's crucial to understand that navigating this chaos requires more than just hope. It requires a proven strategy. That's why I've distilled over a decade of intensive research and investment experience into the XRP Millionaire Blueprint. This is not some simple PDF. It's a comprehensive guide that reveals step by step how to identify the next explosive opportunities long before the rest of the world catches on. If you are serious about transforming your financial future and gaining an edge, the link is waiting for you in the description below. Right now, the market is a battlefield of uncertainty. XRP currently hovers around the 2.34 mark, reflecting another 1.6% drop on the day. Just recently, it was holding a stable line near $250, but an overnight wave of selling dragged it down from 247 to a low of 2.31. We're witnessing a struggle, a potential W formation taking shape on the short-term charts, but this is merely the surface noise. The day-to-day volatility is designed to trigger emotional reactions, to make you question your convictions. We have to look beyond this immediate turbulence, especially with whispers of major geopolitical shifts like those involving President Donald Trump that could dramatically alter the landscape next week. This isn't just random fluctuation, it's a calculated environment. And as a reminder, this analysis is for formational purposes only. The path you choose must be based on your own thorough research and diligence. Because in this game, knowledge is your ultimate shield. Be cautious of the imposters lurking in the digital shadows. Any communication asking for money or personal information is not from a trusted source. The real conversation, the real insights, happen right here. Historically, October has been a beacon of hope in the crypto world. Outside of just 2 instances in Bitcoin's entire history, this month has consistently painted the charts green. Even in the tumultuous year of 2018, a year fraught with market-wide turmoil, October held its ground. Since then, it's been a month of consistent gains. While this month started in the red, it sets a fascinating stage. Will history repeat itself, or is this the exception that proves the rule? This question leads to a more sophisticated way of thinking about investment. The concept of using market volatility as a tool, not a threat. Imagine if one could deploy a strategy, much like an insurance policy, to protect against these sudden downturns. Astute investors don't just buy and hold, they anticipate. By using strategic financial instruments, that jarring sell-off we just witnessed could have been transformed from a portfolio loss into a significant financial gain, providing a powerful hedge against the market's unpredictable nature. Of course, for the long-term believer, the philosophy is different. If the fundamental thesis behind a project like XRP or the broader crypto ecosystem remains unchanged, then whether the price is 230, 30, or 350 becomes irrelevant noise in a much larger symphony. These are the moments when conviction is tested, when the paper hands fold the diamond-handed holders to reap the future rewards. It's in these dips that opportunities are born, where buy orders for assets like SHAI are placed in the hopes of catching a wick down, even if they don't always hit. The market is a patient hunter, and it rewards those who are equally patient. It's a game of inches of waiting for the perfect entry, while others are fleeing in panic. This period will be a defining one, separating the speculators from the true visionaries. To truly grasp what's happening, we have to look beneath the surface at the mechanics of the recent crash. An astonishing figure, nearly 20 billion was liquidated from the market. But the most revealing part of this story is where it happened. The majority of these liquidations weren't on the mainstream exchanges like Binance or OKX. Instead, A massive portion occurred on decentralized exchanges, with hyperliquid being a major epicenter. This tells us two things. First, that this is where the real high stakes games are being played, where significant capital is flowing. Second, it suggests these decentralized platforms may have been unable to handle the immense pressure, causing a cascading effect that pushed prices down further and faster than they otherwise would have. This wasn't just a natural sell off, it was a structural stress test that revealed the hidden plumbing of the market. And it's within this context that intriguing theories emerge, like the one from Ron, who tweeted that a true sustainable rally will only begin when every last bull has given up hope and is convinced the cycle is over. This psychological warfare is amplified by global events. We now have President Donald Trump hinting at a potential meeting with President Xi of China. The market hangs on every word because a sudden positive turn like the removal of tariffs could inject a massive dose of adrenaline into the global economy, sending asset prices soaring. This is the unpredictable wild card. Meanwhile, the technical data shows that after the crash, nearly 19 billion in new short positions were opened. This is classic herd behavior. After a drop, people bet on a further drop. But this creates a powder keg. An abundance of short positions is fuel for a massive short squeeze. When the market turns, it will feed on these positions, propelling prices upward with violent speed. And simmering just beneath all of this is perhaps the most significant catalyst of all for XRP. A new wave of S1 and MTN applications for spot XRP ETFs from giants like Bitwise, Franklin, WisdomRe, and Grayscale. The tickers are being registered. We are inching closer to the moment Wall Street fully embraces XRP. And once the US government reopens its doors to process these applications, the floodgates could open. An ETF approval during a period of market recovery could trigger the mother of all short squeezes. This brings us back to Tom Lee's profound statement on CNBC. He sees through the immediate chaos. He compared the current market panic to the period from February to April, a time filled with day-by-day fear and trauma for investors. But he argues that the foundational pillars supporting the market remain unshaken. He identified three structural tailwinds: the relentless innovation in AI, Wall Street's deepening integration with blockchain technology, and the Federal Reserve beginning an easing cycle. These are powerful long-term forces that are not derailed by short-term disputes or market jitters. When asked about the market closing on its lows on a long weekend Friday, he was dismissive, noting that markets rarely find their true bottom on a Friday. He suggested that Monday might bring the final flush, a capitulation event that for the prepared represents the ultimate buying opportunity. This is the perspective of smart money. They don't run from the fire. They wait for the moment of maximum despair to enter. This sentiment is mirrored perfectly in the Fear and Greed Index, which plummeted to a startling 24. This level of extreme fear is the lowest we've seen all cycle. The last time the index was this low, hovering between 24 and 28, it preceded a massive rally that sent the index soaring back to 74. It might take a week or so to play out, but the signal is undeniable. Moments of maximum fear are historically moments of maximum opportunity. This is a recurring pattern. It's an echo of what we saw back in April when the market was gripped by a similar overreaction. Those who had the courage to buy when there was blood in the streets were rewarded with gains of over 62% in the subsequent rally. This isn't about timing the perfect bottom. It's about recognizing that the fundamental value of transformative technologies doesn't change just because market sentiment sour. Every cycle has its crisis. The Greek debt crisis, the 2018 trade scuffles, and every crisis creates a new generation of millionaires who understood the game being played. The market is designed to transfer wealth from the impatient to the patient, and we are standing at a critical juncture in that very process. The narrative that this cycle is over is a powerful and seductive one, but it may be the final illusion before the next major leg up. True conviction isn't about being an eternal optimist. It's about being a realist with a long-term perspective, balanced with caution. It's about understanding when the market has overextended itself on the upside, and more importantly, recognizing when fear has created an irrational discount on the downside. We are in one of those rare moments now. The combination of extreme fear, massive short interest, and powerful underlying catalysts like the upcoming ETFs creates a scenario ripe for an explosive reversal. Don't let this critical window of opportunity pass you by. The moves you make in times of extreme fear can define your entire financial future. The XRP Millionaire Blueprint was created for moments exactly like this to provide you with the clarity and strategic framework needed to navigate the noise and position yourself for the life-changing gains that follow. Stop guessing and start strategizing. Grab your guide from the link in the description and learn how to see the market not for what it is, but for what it is about to become. Ultimately, the market is a reflection of human psychology, swinging between greed and fear. The real test isn't whether you can withstand the volatility, but whether you can maintain your clarity and execute your strategy when everyone else is losing their minds. The greatest fortunes are not built in times of comfort and consensus. They are forged in the fires of uncertainty.